Joining us now is JPMorgan senior analyst Chris Horvers. Horvers is institutional investors' #1 ranked broadlines and hardlines retail analyst. It's great to have you on, Chris. I want to start right here with the fact that we saw Home Depot rally on these results because they did cut their forecast. They missed on same-store sales. What led to the gain?
You know, for all those retailers like Home Depot and other hard goods retailers that really benefited during COVID and have suffered since then with share of wallet headwinds and higher rates on the housing side, we've all been waiting for the bottom of the earnings revision cycle. So they cut the back half of the year. The numbers start to look beatable, so you could have upward revisions. And then ahead of that, you have a Fed where our economists are expecting a 50 basis points cut in September. You know, historically, retail stocks outperform the market ahead of the first rate cut. And so you're having some of that. So basically, the multiple's going up because the numbers are now troughing and starting to look beatable, especially if the Fed comes in and delivers over the next year.
All right. So before I move on to Walmart and the other names in your coverage universe, do you buy Home Depot at these levels then?
I would buy Home Depot and Lowe's. We upgraded Lowe's. We've had a buy in Home Depot. It's a best-in-class long-term holding. We upgraded Lowe's earlier this year on the expectation that we're coming through the bottom of this cycle. So we would buy both. You are still about 15% off of what would be a true peak to trough re-rating, peak multiple on trough earnings. So, you know, we think Home Depot could get to, you know, close to $400 by the end of this year and Lowe's up to into the high 200s.
Okay. So how does this set us up for Walmart, which is the biggest U.S. retailer? And which the street is currently expecting, I think, a 3.5% increase in same-store sales. We know they've been bringing in not just lower-income consumers, but higher-income consumers as well, launching more of their private label offerings. What do you expect?
Yeah, I think with Walmart, it's interesting because what we've learned from a lot of retailers, including Home Depot today, and I think you will hear from Walmart on Thursday, is that the consumer sort of paused in July, whether it was, like I think Amazon CFO, you reported on it, you know, saw some dislocation, whether it was the election uncertainty, the attempted assassination of former President Trump, watching the Olympics, traveling on vacation, whatever it was, the consumer paused. And that's how Home Depot referred to it. You know, since then, Home Depot says that, you know, trends have picked up. And so while the consumer's weakening, it's not as bad. You know, I think Walmart will talk about that. Certainly the low-end consumer is weakening. Now, on the other side, like you talk about, or like you spoke to, Walmart is gaining a ton of share. So I think you'll get some continued cautious optimism. We expect them to beat earnings and be able to raise the year. But I think they'll splash a little bit of caution on the consumer, but not enough to really disrupt, you know, people's view of what's going on at the company.